everyone. My name is Erin and welcome to my channel. What do we do on a cold, rainy, early spring day in the Midwest where there's not really much to do and we can't really go do things anyway because there's a safer at home order and no one is supposed to go outside? We're not traveling, and I don't know about you, but we're not really spending either, so a lot of what I normally talk about here on my channel feels pretty irrelevant. That is why over the next few months, I'm going to branch off into some financial topics that might be of interest to people who also travel hack. Today, I'll be talking about the stock market. Now, it should be known that this video is for entertainment purposes only. The opinions expressed here are just that, opinions. They are my opinions, which are based on my own experiences. I am not a financial advisor, and you should always do your own research and/or consult with professionals before making any decisions that affect your financial situation. First, I need to ask a favor to help me out in the whole YouTube algorithm. See that little thumbs up under the video? Click or tap that and then hit the red subscribe button. And then, hey, if you don't mind, go ahead and hit the little bell. That's going to notify you when I have a new video up. Some of you may know that I play the piano. I actually taught piano for 22 years. And when I get to 1,000 subscribers, I will be taking requests to play something right here on this channel. And even better, when I get to 5,000 subscribers, I will do a whole video in Spanish. Okay, so go ahead and subscribe, like, hit the bell, and share the heck out of this video. I remember learning about the stock market in 7th or 8th grade, but I found it boring and irrelevant to me, so I didn't pay much attention. What I did take away from that experience was that at the time, you had to actually look at a newspaper like the Wall Street Journal to see what the stock prices were for individual companies or things like mutual funds. So before the rise of the internet, you couldn't really get an up-to-the-minute stock ticker. Even the ones they showed along the bottom of TV channels like C-SPAN were delayed by 15 minutes or more. But in newspapers, they must have been delayed by days, which felt like a real disconnect to me, and I'm guessing that's largely why I wasn't interested. Thankfully, things have changed a lot since my little introduction to the stock market in middle school, and now it's easy for anyone with a phone or laptop to get instant readings on any stock in the world. So let me back up because I suspect that we may have some total beginners watching, and I want this to be as easy to understand as possible. The stock market is where people, sometimes called investors, buy and sell shares of companies. When you own shares of stock, you actually own a portion of the company you bought the stock in. The price of those shares goes up and down depending on a variety of factors. The easiest way to think of it is that if a company is doing well, or if they're perceived to be doing well, their price per share should be higher. And vice versa, if a company is not doing well or doesn't seem to be doing well, you would expect their price per share to be lower. However, this is not always exactly the case. Sometimes there are bigger factors that affect all stocks. Right now is a perfect example, and this seems to happen about every 10 or 15 years. At the current time, we're in the midst of a worldwide pandemic, which has affected the economy in a negative way, causing lots of stocks to bottom out. You might hear things in the news about how the markets are down and how terrible that is. You might hear about big names such as Warren Buffett selling off huge amounts of his shares in certain companies and how people are panicking. All of these things have an effect on the prices of stocks. From my observations, though, once you hear about something in the news, it's already too late to use that as a predictor of whether stock prices will rise or fall. Whatever news you're currently hearing is already taken into account on the current price of shares. So to summarize, whatever the current prices are usually reflect how confident the public is in those companies at that exact moment. We're in a unique time right now where many great companies' stock prices have dropped dramatically in the past month due to the coronavirus pandemic. Some people think this is a really bad thing, and I suppose it would make a person feel uneasy if you had a lot of money in the markets before they fell. But if you didn't have a lot of money in the markets before, then I believe this is a great opportunity to get in with a good chance of some huge returns over the next several months and years. The last time the markets crashed like this was around 2008 and 2009. That was the first time I considered anything to do with the stock market. I had gotten a call from my dad who said all the big banks were way down, and he wondered if I'd want to throw some money together to buy one and see if we could double our money in a few days. At the time, it was anticipated that the president was going to bail out the banks, which should result in stock prices going back up. it was clear that we were in a very narrow window of opportunity and that we needed to make a decision fast. Now, up until this point, I had never purchased a stock in my life, but my dad had, and my dad is old school, and so we called an actual person, a stockbroker, to buy the stock for us. Now, he told us that none of the banks were recommended for a buy, so he did not personally recommend that we buy this stock. But we were settled on what we wanted to do, and I think we each put $250 in, so it was just enough that doubling it would be kind of fun, but also a small enough amount that if it tanked, it wouldn't be a huge deal. Anyway, he and I called this guy and told him we wanted to buy Citibank when it hit $1.60 per share. And also that we wanted to sell it when it hit $3.20 per share, effectively doubling our money. Now, each of these transactions cost like $55. So in all, we would have to spend $110 to use this broker to make it all happen. But that's what my dad wanted to do, so I went with it. So I believe we each bought 156 shares of Citibank. The buy did go through that day at $1.60 per share, and then we waited and watched. I was using Google Finance to keep track of it, so I was watching it constantly every day for 5 days. It was all consuming. I was totally excited, totally nervous. It's a really weird thing because I didn't expect to feel that high amount of adrenaline having to do with something like the stock market, which I used to consider boring and irrelevant. 5 days later, Citibank hit $3.20, which triggered our sell, and we walked away with $500 each minus the broker fees. Just so you know, Citigroup was trading at well over $500 per share before the 2008 collapse. It never returned to those numbers, but it was up to $83 just before the current collapse. So doing some quick math, if I had held on to them until February 19th of this year and sold them at the price of $78.05, my $250 investment would have been worth $12,195. This is why I like to buy stock in solid companies at very, very low prices, like anything in the sub $10 range, because the growth potential is super high. Every penny that it goes up makes a huge difference when you buy it that low. So this Citigroup 5-day trade was pretty defining for me. I went on for the next few years investing here and there, usually doing okay by selling higher than what I bought. I never used a broker again though, because that part really sucked. I started an account with an online trading thing. I think it was Scottrade at the time, which is now TD Ameritrade. And that cost $7 per transaction instead of the $55 that my dad's broker charged. And also, I didn't like the advice that the broker gave either. Like, my thought process on stocks is almost always the opposite of whatever like people are saying to do, because I like to buy low and sell high. And you will see if you read things or if you watch news reports where they're talking about stocks, like when the stocks are tanking, they're all like sell, sell, sell. And I'm over here like buy, buy, buy. Anyway, things have changed even more since then. There are several apps that allow you to buy and sell for free. Check the link in the description for the SoFi Invest account. If you use my link, you'll get $75 in free stock of your choice after funding the account with $1,000. So I use 4 tools to manage my stocks. The first thing is an old school whiteboard, like literal like whiteboard on my wall. Here I have the open times for the market according to my time zone, so I can remind myself because I forget when it opens and closes. And then I have how much money I have in each of my main stocks right now, and then a list of what prices I bought those stocks at, and then the prices that I'm waiting for in order to buy more. This is just how my brain needs to see it organized, so this might be different for others. The second tool I use is Google Finance. Now, this tool is not what it used to be, because it used to allow you to put in your buys and sells to give you exact numbers based on those entries. It doesn't do that anymore. What I use Google Finance for is the robust watch list data. So stock prices update every second, and it shows the amount and percentage each stock is up or down that day. You can click into any stock and see the day's graph along with other important numbers like the 52-week high and low, the daily high and low, and then below that are linked news articles about the company starting with the most recent. And the reason that part matters is because whatever is being talked about in the news influences what people are willing to pay or sell for the stock. I like to keep a tab with my watch list on the side of my computer screen all day while the markets are open so I can take a quick glance whenever I feel like it. The third tool I use is Yahoo Finance. Now, you're not going to hear a lot of people talking about using Yahoo for much of anything, but their finance tool is actually really great. It's similar to how Google Finance used to work, in that I can put in my buys and sells so it tracks current values and percentage of gain or loss at all times. The stock prices do update constantly here too, but I use this one to keep an eye on my currently owned stocks, where Google is more for watching everything I'm interested in, whether I own it right now or not. Yahoo Finance also has a really good app with tickers that update to the second, just like the web version, so it's easy to keep an eye on my holdings when I'm out, which lately hasn't been much, but still. The fourth and final tool is the app I actually use to buy and sell my stocks right now, which is SoFi Invest, which I mentioned earlier, and there's a link in the description. This is by far the best investing app I have ever used. It is incredibly easy to understand, very easy to execute. The mobile app is actually better than the website version, but both are incredibly functional and useful. So the stock market as a whole is really low right now. Some might say that several of the best stocks out there are on sale at the moment. Nobody knows how long this will last, or if we've reached the bottom, or if we still have a ways to go. My personal strategy, and again, this is not advice, this is just me telling you what I do based on my experiences, is when something meets these criteria, I will buy it. First criteria is if I have extra money where I wouldn't suffer if I lost all of it. Number two is if I like the company and feel confident that they will last. Number three, if the price is toward the bottom of the 52-week low. And number four, if it has the potential to double my money or more if I'm willing to hold on it anywhere from 1 to 3 years. I determine a stock's potential by looking at the price now and comparing it to what it was going for just before about February 20th of this year. So if I can buy something like American Airlines at $11.50 per share today, knowing that before the coronavirus crisis, it was trading at around $30 per share, boom, that is a buy in my opinion. And if I see that it goes down again, let's say to something in the $8 or $9 range, I will buy more. I buy it because I don't think the big airlines will fold. I think the government will bail them out before that happens because our country and the world really rely on the commercial airline industry to keep the economy strong. Just like the banks in 2008, I don't think the government will let them fail. Even though corporate bailouts may be contrary to my personal, political, and moral beliefs, I also think it's smart to make sound investments if I have the means to do so. So the types of stocks I have my eyes on these days are airlines and other travel-related companies, banks, and oil companies. These have all been trading at record lows lately, and again, I think are all big enough industries that I think they'll benefit the most from any potential government bailouts. That's all for today, guys. I hope this has been helpful, and please remember to hit the like button, hit the subscribe button, also hit that bell, and come back and watch more. Watch my old videos. If this is your first time watching my channel, please check out my older videos. There's a lot of stuff in there about travel hacking, which is what I normally talk about. I'm just kind of not talking about that right now because I don't feel like it applies a whole lot to the way that the world is working at the moment. So I hope everybody out there is healthy and safe and staying home, and I will see you next time.